we can get started. Mizan, maybe if you want to quickly give a, I'm sorry to bring you on spot, but if you're going to
Yeah.
quickly give a very quick intro on what tax harvesting is, and then maybe that could be followed
Yeah.
by Mr. Piyush, and then we can jump
Yes, yes.
right in.
So, I mean, absolute starting disclaimer, I'm not an expert on tax, and I'm not really an expert on tax harvesting either. So we'll let Piyush also, pitch in with his inputs, right?
Of course, of course.
But yeah, I mean, folks, at a very, very simple level, it's this the you know the government rule, or let's say the tax rule, is that you can claim gains as in profit of 1.25 lakhs per year, per financial year, on any equity mutual fund sales, right, without paying any tax, right? That is fundamentally what we are trying to exploit here when everybody is talking about tax harvesting or calling it tax loss harvesting, right? The simple thing that we are trying to do is we are trying to take advantage of the 1.25 lakh profit exemption that the government has given us and the income tax authorities allow us, right? So the key to the whole thing is that you know it's easy as a rule to say, oh, good, 1.25 lakhs of my equity gains will be tax exempt, wonderful. But when it comes to actually doing it and figuring it out, let's say like we are now close to March 31st, most of us have 5, 6, 7, maybe even more funds. Many of us have 15, 20 funds. Trying to figure out which are those funds and how many units of that each of those funds we should sell, so that our gain will be just approximately 1.25 lakhs and not much more, is a complicated task, and I sincerely do not know how to do it manually, right? So the key is, to use some sort of tools. I think there are multiple tools available.
Just to add here, Mezan,
Yeah.
once you're selling the buying a property and getting it, the funds from the mutual funds or shares or whatsoever means, add to that, this profit can be set off by the purchase price of the property under section 54 EF or something like that, right? So that's a benefit that you can attain for selling the selling the shares and getting the profit and setting off from the after buying the property. There are certain rules that you have to abide by for setting off getting the capital gain set off. Over to you, Mezan. I
Yeah,
hope
yeah.
this helps.
Yeah, okay, okay, thank you. So that's useful information. I was not aware. Yeah. So that's all we're trying to do, folks. In summary, you're trying to figure out which mutual funds can you sell for a value of 1.2, I mean, for a gain of or a profit of 1.25 lakhs, and get that tax exemption fundamentally, right? Yeah. So, I mean, of course, I had shared the other parts later as well in the group chat in the morning. So, there's a detailed article which was written by Arthgyan that explains everything in detail. This is just in a very simple, sort of high level form. You're trying to take advantage of that 1.25 lakh exemption, right? So, Akshay, what should we do next? Should we try to share the screen and show the tool, or maybe Piyush can talk about something that he wants to on this before we go there?
Sure, sure, absolutely. I mean, I think let's do the tool thing first, and then maybe we can,
Yeah.
so people can follow along, and then maybe,
And then get into question and answers,
correct,
right?
correct. Then the
So
questions can be
let me
answered.
see. I haven't shared on this platform earlier, but yeah, share. Oh, it's asking me to share the full screen, is it? Okay, there's
No, you
no.
should have a window as well, option of.
Yeah, it is saying share screen, and she's saying share presentation. Only two options. But anyway, I'll share screen
Yeah,
then.
so you can do share presentation, and then it will just try once.
Yeah, okay, but then it'll ask me to share a PowerPoint. No, I'm
No, no,
thinking
no, just try.
share presentation. No, nothing is working. Nothing happens. So let me try share screen.
Okay.
Yeah. Chrome tab. Oh, okay. So choose what to share with riverside.com. Yeah, maybe this one, right? Chrome tab. Maniyantra. Okay, great. It's allowing me to share a specific tab only, right? So, yeah. So, folks, like I said, when if you want to just go in, I mean, shall I just go in and do the login part right from the login we'll do, right? Okay, we'll do right
Yeah.
from login, right? So this is the, you create an ID and you sign in, right? As soon as you sign in, right, you basically go and click on tax, right? Of course, no, you would have needed to upload the CAS, I said, right? As soon as you sign in, you have to go to upload CAS. So click on upload class, click here, right? And the CAS you have to get from CAM's website, right? I don't know how many of you are familiar with getting a CAM's CAS, but I can try and show it to you. But it may not share. I don't know if it will share it here. Will it share a CAM's CAS? Okay, Akshat, you tell me if you are able to see that, you know, uh, are you able to see my CAM's CAS, the other tab also, or you're only
No,
seeing
no,
the
no. We just see the money yantra tab.
Manyantra? Okay, so, okay, how do we, then that means we have to show people how to do CAM's CAS as well. How do
You
we
can
share?
share the whole screen if you require.
I think I'll
Need
do
not
that. Yeah, I
share
think I'll
the.
just do that, right? So let's go back to, where is it here? Yeah, share, and I'll share screen. I think that will keep things simple. I'll say share screen. But here also, it's even when I'm saying share screen, it's asking me to choose which tab. Wow.
No,
Entire screen.
you'll have
Okay,
a
yeah, yeah.
entire
There is
screen as well.
yeah, got it. Entire screen. But now it's not giving, it's not enabling share for me. I'm wondering why is share not enabled? Share is disabled. Window.
No, no. So you click on the screen. You
You
click on
click
the
on the
screen,
screen.
and
You have to.
then
There's a single window over there.
Yeah.
Click on.
Okay, got it. Yes, perfect. Okay. So now, cams. Yeah. Okay. Now, can you see my cams? This thing. Are you able to
yes,
see
yes,
Akshat?
correct.
Yeah. Because this is come from some Yahoo search, etc.
So
But you just search
I'll,
for
I'll, I'll try
yeah.
following the steps
Yeah.
myself as
So you
well.
just all you do to upload your consolidated account statement is type in Google CAMS CAS, right? CAMS consolidated account statement, right? You go in there, and then he's given, when you go into the website, he's given you specific instructions, okay? From which date, right? You have to say detailed, you have to click detailed statement, okay? Then you have to it'll say from what date. So he's given on the website, if you look, he's given specific instructions, okay, as to, see here view instructions to download CAS, right? So he's clearly told you select statement type detailed, select start date as 1st Jan 1990, etc., right? Folio listing, folios with zero balance, enter a password. So he's given you all the instructions. You just have to follow the instructions and go to the CAM site and submit a request, okay? fill up say zero balance folios, right? Put in your email address, all of that, right? Whatever is registered for all your investments, right? Detailed transaction, date, whatever, from March 1990, etc. This has already been done for this person that I'm showing you. And then you put in a password to open the PDF. Then the PDF, within a few seconds, the PDF will turn up in your inbox, right? Once the PDF has turned up, you come back to Moneyyantra and you do the upload CAS, right? And give them the password that you had set for your CAS. That is something you would have set on the CAM's website, right? So fill in the password here, and then it will start. Then it has access to it, and it will fully analyze your tax and every other aspect of your portfolio. So once CAS has been uploaded, you go to tax, and then you click on tax harvesting, right? And as soon as you click on this, right, within seconds, as you saw just now, it is creating a set of recommendations, right? So let's just look at this one, for example, right? It's telling this person that they can do an exact gain of 1,24,999 by selling 967 units of SBI mid cap regular fund, right, for a market value of 2,01,000, right, or roughly 2,02,000, right? So once you get this recommendation, all that you have to do fundamentally is go to any website where you do your transactions, or fill out the form if you have an advisor, and go and sell 967 units of SBI mid cap to get a gain of 124,999, right? And that's about it basically, right? So this calculation is the really hard part, right?
Yeah.
The rule is easy and says, take 1.25 lakhs, but it's very hard to calculate and say for which fund and how many units should I sell so that I just come to that level of 1,25,000 in profits or gains, right? Of course, this has given us multiple choices, right? It has given DSP large mid cap also. So it is saying you can sell, this person can sell 409 units of DSP large and mid cap for a market value of 2,29,000, right? So eh, no, these are not the only two. Then it's doing a lot of analysis. It's
Yeah,
also,
I think it's giving that exit low performing funds and
yeah. So
yeah.
it's very good because it's even telling you what is the reasoning of this tool, right? See this one also, right? See why this fund, if you look at it. So suppose you have a
Meisjan, did we lose you? I think some network issue at his end. We'll give a second. So I think this is the capital. This is the tax harvesting for the capital gain of 1.25. Similarly, we'll have a process to do the tax harvesting for the losses also that we've made in the previous year, right? So, Piyush, do you want to talk a little bit about the tax loss harvesting, which can be carry forwarded for 8 years or so?
shall I
Yeah,
join
sure.
back? Ah,
Yeah, he's back.
Oh, he's back.
okay. Sorry about that. Yeah, that's
No, I think there's still some issue.
Probably he's switching over the Wi-Fi.
Yeah, yeah.
Yeah, so what happens for losses, right? So how it goes is that whatever loss you make, short term or long term, that gets carried forward for 8 consecutive years until you set it off from the profits. Suppose what happens is that
hello.
you make, yeah,
Yeah. Am I back finally?
yeah, you are back.
Okay. Sorry about
Yes,
that.
yes.
Okay, let's continue now with whatever questions people have, or Piyush, if you have other things you want to share, etc.
Yeah, no, I
Should
think
I start?
I think we were just using the time, and in the meanwhile, we requested Piyush to just share the tax loss harvesting, like the
Yeah,
eight
yeah.
lakhs thing. So he was just talking about it. Yeah, maybe you can cover that, and then we can uh, go forward. Mr. Piyush?
You want me to continue? Yeah, so what happens is that suppose uh, uh, you have a loss of 50,000 rupees in this financial year, and you file it in the returns, and you can carry it forward for the next 8 years until you set it off. See, short-term capital loss gets set off from the long-term capital gain, but long-term capital gain cannot be set off from the short-term capital loss, right? So you can continue to set off the long-term capital losses continuously for 8 years. You can carry forward it. Short-term capital loss that you have, if you don't have long-term capital gain, then it will be carry forwarded. If you have long-term capital gain and short-term capital loss, then short-term capital gain will be set off from the long-term capital gain, and then the carry forward, the tax will be accordingly. So that is how it goes, and it's good to book the non-performing assets early as possible, right? So you can take it up accordingly. As per the law, there are certain rules that you have 20% taxation for long-term capital gain, including indexation, with indexation, and 12.5% with without indexation. So all in all, it counts that with indexation is tax is higher than the without indexation part. That's what I have noticed so far, but it can be contrary at some points.
Sure, sure, perfect.
So
Okay, so while
this,
Mizan joins back, yeah, no, thank you, Piyushji. Lakshmi, do you have a question? I know you're back, but do you want to try something with yours or?
Hi, am I audible?
Yeah, we're not able to see you.
Yeah, some issue with the camera. I am not sure. Like
Okay.
previously, I was using able to see, like turn on the camera.
Yeah, yeah.
Yeah. For me, for the first time, I'm hearing about the tax harvesting. I don't know about this terminology at all. Uh, that's why I was joining this session to gain the knowledge.
Okay, okay. Sure, sure. So first thing first, right? Let me be honest with you. I have never done tax harvesting for myself. Okay. Now this might sound very stupid, but I find it very confusing, and that's why even I wanted to join this session and kind of understand this because the tool made it look simple. But one thing that I wanted to share with all of you is don't stress about it. Right? Don't think that if I don't do it before 31st, something bad is going to happen to me or my wealth is going to be destroyed. No, nothing will happen. The first and foremost thing is tax harvesting is just a way for us to optimize our taxes further, right? Just like we in our old and new regime, for us to optimize our old regime, we do a lot of investments, we do the tax saving options, so on and so forth. Just like similar to that, this is a optimizing technique that is used with respect to your investments, right? So now, what Mezjan was showing so far and what Piyushji was also talking about is sorry, Mezan and Piyush, if you don't mind, you might have to go on mute for some time. I think there's some background noise because of that. Perfect, perfect. Thank you. Right. So what Mezan and Piyush was so far sharing, and what while Mezan was sharing his screen was, our government allows that if we've made a profit of 1.25 lakhs per year on our investments, then up to that amount of profit is tax free, right? Now the question is, if this year we don't sell anything, we are obviously losing that opportunity to book some profits of 1.25 lakhs to save taxes, right? Because let's say if next year I sell 3 lakh rupees of worth of shares, then 1.25 will go away, but I'll have to pay the taxes on the remaining 1.75. Correct? I hope that makes sense. So now the thought here is, why not? We know we don't need money right now, but why not book some profits and actually save some taxes, because this 1.25 lakhs will be completely tax free for us, and this will come back into our account, right? A lot of people also do is that since you've taken out your money, you can certainly reinvest it again as well in the coming weeks, in the coming months, so on and so forth. So that means that in a way you've reinvested whatever profits you had, but at the same time book some profits tax free, right? So that's the overall concept of tax harvesting. Cool. I do see a thumbs up from Mezdan, so thank you. Glad that I was able to explain it well. But anyone else who has any questions can have a quick round of thumbs ups on the chat for people who are hearing, so that I know this is making sense so far. Come on, folks, we need some support. We're doing this for the first time.
Yeah, and if they have questions, of course, if no thumbs up, then question is welcome, right?
Okay, so I see at least one thumbs up from Shashwat, so I'm happy that at least one person got my answer. Lakshmi, did that make sense to you so far? I know you were on call with us, so
Yeah. Yes. Yes.
okay, perfect. So Lakshmi, it made sense. Abhishek made sense. Perfect. Three, four people. I think there's some lag also on YouTube, so this is good. Okay, now second part to this. So this was part one, 1.25 lakhs of tax booking, I mean profit booking to save taxes. Second part to this is, now what a lot of times what happens, and for a lot of us currently in the given scenarios, the war going on, the market conditions going on, we might have made some losses, right? Now there is a way the government allows that whatever losses a person can book in a year, that can be carry forwarded for the next 8 years. So, for example, let's say if I made a loss of 1 lakh rupees in this financial year and I sell those stocks or mutual funds at a loss. So basically my loss bucket is 1 lakh rupees. And now on top of that, let's say I sold my mutual funds that were in profit for about 2.5 lakhs, right? So my 2.5 lakhs of profit and that the 1 lakh gets subtracted. So my total gain is 1.5 lakhs. Let me try doing this thing, right? I'll in fact open up a sheet because I feel I'll be able to explain better that way. And yeah, okay. So I hope you all can see my spreadsheet, right? I'll increase the size a bit. And what this says is, so what we were talking about is so 1.25 lakhs of capital gain, right? Now, let's say if today, while selling, I have a profit of about 3 lakh rupees on my total investments. Okay, profit of 3 lakh rupees.
These are all long-term capital gain
All
after 1
long-term
year.
capital gains. Correct. Good that I. So long-term capital gains, folks, which means you bought these mutual funds or shares greater than 1 year before, right? So you must, as of today, 24th March, so you must have purchased all of this prior to 24th of March 2025, right? Only if that is done, then only this is applicable, right? So let's say if you've made a total profit of 3 lakh rupees and your total loss, say, is 1,50,000 rupees. Okay, just making this up as is. Now, what happens is if I sell, okay, sorry, let me take it this way. Scenario one, I just make a loss, I make no profit. Okay, so scenario one is you've made a lot of loss. Now, you take this loss, you just sell whatever mutual funds or shares you have in loss, and that's it. You do nothing else. You just sell it for a loss and you basically book your loss, right? You may reinvest it again after a few weeks or so based on your the ways you want to do that, but you just book a loss right now. Now what happens currently is you don't get any immediate benefit for it, but this gets carried over for 8 years. What does that mean? This means that now let's say this is in 2026. Now let's say in 2027, in case I made a profit of a total of 3 lakh rupees, right? Now, obviously, if I did not, so okay, so if I made a profit of 3 lakh rupees, right? Now forget this part, just remember this part. Now, how much tax will I have to pay? Up to 1,25,000 rupees is tax free for me, right? And so I will have to pay a capital gain tax on the remaining 1,75,000 rupees, right? Now, how much would that be? 12.5% of this amount, which is 21,875 rupees, right? Now that becomes my total tax liability. However, since I had booked some losses in the previous financial year, what will actually happen is instead of this gain of actual gain of 175, the scenario will become that my 3 lakh rupees of profit gets subtracted from the 1,50,000 rupees of losses that I had booked in the previous year. So my actual gain then becomes 1,50,000 rupees. And out of this 1,50,000 rupees, as you all know, 1,25,000 is tax free, right? So my gain then becomes 1,50,000 minus 1,25,000, which is 25,000 rupees. And a 12.5% interest on 25,000 rupees is 3,125 rupees, right? So I only paid taxes of 3,000 rupees, not 21,000 rupees. Does this make sense? And just like we did it in 2026 to 2027, if so this can get carried over till 8 years, right? So 2026 it can get carried over till 2034. That's the correct. We saved 18,750. Absolutely. So that is the high level understanding of tax loss harvesting. So two scenarios. Scenario number one, you just book profits and use the way that Meshjan shared on Money Yantra Again, folks, no affiliations with Money Yantra. We just found this tool useful, so that's why we are sharing it with you, right? And that's the reason. So no affiliations, no paid promotions, so on and so forth. And scenario two was when even if you don't have any profits, you book losses which can get carry forwarded till 8 years, right? This for this, I'm not sure. Mason, do we have a tool for this as well, or will this we need to calculate? Mason, you're speaking on mute, I guess.
Sorry, yeah. No, so what I was saying is, no, I do, I mean, maybe there is some tool, but I am not aware of any tool which does this. In general, I think you and your CA just have to keep track of cumulative losses over the years and, adjust them against gains in future years. That's the best I know, but I could be wrong. I don't know. I mean, maybe there are tools which can do it.
Correct, correct. So we would strongly recommend that. Again, I would once again want to mention this is not a beginner friendly lesson. If you are a beginner just getting started with investments, don't even think about it. Your first and foremost goal should be to maintain the financial discipline and just continuously keep investing. But if you have somebody, I mean, your CA who helps you with tax filing, or somebody, an expert who can help you with this, go ahead and start doing these discussions with them. This is the week, right, when you can make the most of it. Before 31st March is what you need to do, right? You need to do this before 31st March. Sorry. Yeah.
So, are there any questions from the audience?
I know there are few coming in the chat. If one is in loss at FY end, should one mandatorily book loss to avail benefit in future FYs and not let go of this doing nothing, right? Yes, Shashwat. In a way, I mean, uh, I would say it's a good practice to do this. I mean, there's no harm in not doing this. Uh, Mizan, Piyush, do you want to add to that question?
Yeah, if you're talking about mutual funds or shares, I think if you're sitting on money, this is the right time to choose the best shares and uh, I mean at the
No, no, the
bottom or
question
near
was on.
bottom.
Sorry. No. The question was on losses, not on selection of shares.
Okay,
If,
yeah. So and losses, if you feel that you are booking a, if it's not a worth share, worth investing, or you made a mistake and you're on loss, it's good to book loss anytime that you feel it. That's my question. That's my answer.
yeah.
Yeah. I think only sell at a loss if you have completely lost faith in that share or in that mutual fund, right? So you have no more hope for whatever reason. Let's say some management has changed, the CEO has changed, resigned, whatever. I don't know, whatever reason you think. But otherwise, you don't want to book losses, right? If you still have faith in that company or in the mutual fund, you don't want to just sell
So,
and book a
but I
loss.
think I think Mizan, the question is, let me put it this way, right? Let's say bought I'll not mention shares because then everyone gets confused. I'll say mutual funds only, right? So let's say we bought a mutual fund A, and we invested, say, uh, 1 lakh rupees, okay? And now what we are saying here is, give me a second. Yeah. So I think the question that Shashwat has is, mutual fund A has 1 lakh rupees, and let's say it's on a loss now. We've kind of it's currently 50,000 rupees, right? And now we are pretty sure we understand the market is down and it's a long term thing, so one has to stay invested for the long run. The question that Shashwat has: should he book the loss and reinvest it into the same mutual fund scheme after some time, so that at least the 1.2 so that at least this loss is something that he can book and carry forward for the next 8 years.
Yeah, I don't know. I mean, at least I wouldn't do that. So I'm just saying I would not do that. I don't know if
Okay.
it's the best strategy, but
Right.
Yeah, I would only do it if I have lost faith in mutual fund A completely,
Okay.
or the fund
So
manager.
just for the purpose, so what you're saying is just for the purpose of saving taxes,
No.
and thinking of, that this might help in
No.
future, you wouldn't do that. Only if you've lost faith in it, then you would do that.
Yeah.
Cool.
But I'm not saying that's the right and the best thing. I'm just
Yeah.
saying that's what I would do. I
And
don't know
If
if
you have a faith in a particular mutual fund or equity share, this is the right time to invest and get multiple units at a lower rate. That's my idea.
yeah, perfect.
It's just not for the sake of saving taxes, it's not a good thing.
Good thing. Right.
You may miss a bus if you try to reinvest. That's what my idea is,
Correct.
personally.
No, that's a good point. That's a good point. So yes, Shashwat, I think you have an answer to your query. That's the best that we think of, but you're absolutely feel free to reach out to a tax expert in case you still need help with that. Cool. What else, folks? I hope you're all enjoying the live so far. Any other questions that you have? Lakshmi, I know you're on call with us. All good at your end? Were you able to learn something?
Yeah, essentially. But uh, I was working, but I have a query. Shall I
Mhm.
ask?
Please, please.
Yeah. Uh, my, I am working. My wife is housewife, but I used to do like transactions on her like PAN number. I mean, whatever investments or all those things. Uh, is it a good option or will it be in the future? But last year I filed the tax also, zero filing tax. Uh, like I'm new to will that be a safer zone or like in the future if wife and husband need to pay the tax or something like that?
Okay, okay. No, so basically your question is that you are the earning member of the family and
Yeah,
you're
yeah, yes.
also transferring some money to your wife's account and then investing through her account, if that is the right approach. Again, I don't see any issues with that. I mean, if you are filing taxes, if you're doing everything the right way, there should not be an issue. It's good to, have financial independence at both the husband as well as the wife's end. So, yeah, no issues with that.
If you want to know the legalities properly, Lakshminath, then
Yeah,
since your wife is a homemaker, there is called something called uh, I'm forgetting the name term. Uh, you are entitled to pay the taxes against her name. There is, let me find out a term that I'm talking about.
Clubbing provisions?
Clubbing of income, yeah. Clubbing of income, based on clubbing of income, you are liable to pay the taxes, not your wife.
Yeah,
okay.
which is
So, but
in case
since
of a
people
Piyushi, that will be when
see, if
Lakshmi sells it, right? Sells any mutual funds or
no,
securities.
no, no. See, what happens is that, yeah, of course. I mean, that's when he sells. Lakshmi, not his wife. See, what people over here in India escape this particular law is that because of clubbing of income is very common over here, and people file the taxes in return of his wife or his kid or something, right? Clubbing of income happens as per law. Uh, if you are giving your money to your wife and you're investing on her behalf, as per clubbing of income, whatever gains she makes from whatever sources, you are entitled to pay the taxes. That will be added to your income. But people tend to escape it every time as per law. But when the scrutiny happens, then you are stuck,
Yeah,
badly stuck rather.
correct. Yeah, so please,
Okay, good.
make
Yeah.
sure. Sorry, you were saying something, Lakshmi.
No, no, I got the answer, but it's better to even if I invest in my account also, like as per the slab, I need to pay maybe instead of in the future.
Yes,
Yeah,
it's same as you investing yourself.
yeah, yeah, yeah. Yes. Thank you.
People escape this every time because there's not much major loss or profit that happens. So that's what. The first question that during the scrutiny that a person that the income tax department asks, what is the source of income?
Hmm.
You don't have anything to say once your wife is stuck.
Yeah, got it.
Somebody is asking in the chat, what's an HUF? Sashwat is asking, sorry. So,
HUF, Hindu United Family. What happens over here is that there is something called Karta of a family, who is the eldest member of the family. What happens is that in this HUF is that a family of multiple people gather and form an HUF, Hindu. This is for the Hindu family only. Suppose grandfather, his sons wives, and then sons the grandfather's granddaughters and sons, they form a family uh, legally, and they tend to invest in the particular equity that's treated as an individual, like an individual. Taxation happens as per individuals, and this the grandfather, the eldest member, becomes the karta of the family, and he is the authorized person to sign for everything. They can open a bank account like an individual. They can open PPF and do whatever investments that they want. Right. So, like they're treated like an individual, and taxation happens almost like an individual, and it's separate income that source that happens. Right. HUF is not so investor friendly unless you have a family income together, like uh, agriculture land or agriculture is there. Like they have multiple shops under their name that is a source of income. It doesn't make sense for a nuclear family to create a HUF, especially when when one or two people are employed. For in the husband wives are employed, it doesn't make sense to have an HUF together. Hope that answers, Shashwat.
awesome. Yep, I think that, yes, that does answer this question. Perfect. I think we've covered what people wanted to learn about, and obviously we can follow up with the discussion on our WhatsApp community groups. But I hope any questions, folks, before we end, because
How many members are there?
right now we are about
Audience?
12 people.
12 people. So many people escaped.
Yeah, maybe they got their answers. Cool.
Let
So
them
I
know
have
if
requested for
let them
my,
know if I'm there on the group. If they want, they can quote me.
yeah, absolutely. Thanks,
Happy
thanks,
to answer
Rahul.
all your questions.
Yeah, that means a lot.
Mizan, thanks.
Thanks, Abhishek. Thanks,
Thank you.
everyone.
Thank you, Piyush. Thanks,
Cool.
Akshay.
I think we can
Thanks,
wrap it
everyone.
up. Thank you, Piyush. Thank you, Mizjan.
Good night.
Good. We
Thanks,
finally
Akshat.
started with a
Live
live
session.
session. Yeah, perfect. Thank you,
Right.
guys. Thank you, everyone.
Okay. Bye.